Welcome to this lesson on manufacturing accounts. We are going to start with some key definitions that are related to manufacturing accounts. Okay, once we understand these terminologies, then it will be easy for us to do a manufacturing account. So here are some key definitions. The first is manufacturing account itself. What is a manufacturing account? So manufacturing account is simply an account that collects together all costs involved in production to determine the cost of goods completed. So manufacturing accounts are accounts for manufacturing companies that are making things. Okay, so as they are doing this making of things, there should be an account that tracks how much has been produced and what is the cost of what has been produced, what has been made. That's the whole point of the manufacturing account. So another term is stock or inventory. So in manufacturing accounts, stock and inventory, we have stock of raw materials, which are raw materials on hand. Okay. Then we also have stock of work in progress or WIP, which refers to partly completed goods. Okay, goods that have been partly made. Let's think of a simple manufacturing account that is, a manufacturing company that makes chairs. Okay, so the process involves buying timber, then putting the timber together to make a chair. So it's not always that by the time the books of accounts are being written, all the timber has been made into chairs. So it may happen that part of the chairs, um, part of the timber, it is, the timber has not been put together completely to make chairs. Let me say that again. That did not come out well there. So the manufacturing process involves getting timber, putting the timber together so that you have chairs, right? So it's not always that by the time you are closing the books of accounts, all the timbers have been made into chairs. Okay. So the timber that is on its way to be made into chairs, maybe just a few of them has remained for a chair to be complete. That is called a partly completed good or work in progress. Okay. Then there is also the stock of finished goods. These are goods which are ready for sale. Okay. So these are the completed chairs now which can be sold. Then there's also another term which has to do with raw materials consumed, which is the value of raw materials used up in the production process. So these are the number of timbers that have been used up to make the chairs. Okay. So with those terminologies, we look at types of cost. Okay. Don't forget of talking about the different types of raw materials in hand, work in progress, finished goods, and also the raw materials that has been used up. Now the cost. Okay, it's very important to understand those terms as we will see how easy they are going to make preparing the manufacturing account. Um, so the types of cost include direct cost, which directly identifies with units produced. So there are two types of cost. There's direct cost and indirect cost. So direct cost identifies with units produced, such as the timber you are using to make the chairs. Okay, that is, at the end of the day, when you have a chair, you'll be able to see that the cost went here. Also include direct labor, people who are involved in making chairs. Okay, so the amount of money you pay the workers, that is direct labor. Okay. There are also direct expenses such as carriage inwards on raw materials. So when you bought the timbers from town or wherever, for those timbers to be brought inside your factory, those are called carriage inwards. They are examples of direct expenses. They are expenses that actually affect the actual production of the goods, okay, or that are part of the actual production of the goods. Then we also have prime costs, which are the total of all direct costs incurred during the period. So these direct costs, which includes direct materials, direct labor, direct expenses, when you add them, you'll get the prime costs. Then there are also indirect costs. Okay, indirect costs are costs that are always there, but they don't deal direct with the manufacturing process, okay, such as factory overheads. Okay, so these costs do not directly or are not directly traceable to specific units. Okay, you cannot say that making this chair, for example, if electricity was used for the workers to see to see properly when they were making the chairs, it's difficult to trace that this is the amount of electricity that was used on this chair. Okay, it's difficult because electricity has to be there for the chair has to be manufactured. Okay, it has to be there always for the workers to see what they are doing. Okay, but you cannot say that this chair consumed this amount of electricity. No, it's not directly connected to the units, okay, or to the goods being produced. So examples of indirect costs include rent, lighting, and power. Okay. Also, depreciation of production equipment. The hammer you are using, the amount of depreciation it undergoes, is an example of indirect cost. Also, factory management salaries are part of indirect cost. So there is insurance on factory building. The building you're using, you have to pay insurance. So that is an indirect cost. Because at the end of the day, the fact that you're using the building, you have to make sure that that building is insured against any loss. Okay. Now, if if I ask you as the one who's in charge of production, how much cost does it take to manufacture these chairs? You have to include the insurance, even though you cannot say that uh, the building insurance on this chair was this much, because they are not in any way close, but the chairs are being made in that factory, in that building. Okay, so this is an example of indirect costs. So now, there is when you add the prime cost, which are the total of the direct cost, plus the indirect cost, which are production overheads, you get the total production cost. It means you are done with the manufacturing account. Okay. Why do we want to know the production cost? We want to know the production cost because once we have the production cost, we can see if we're making profit or loss. So most of the times after doing the manufacturing account, you may need also to get the production cost. You use it in profit and loss account to know the profit you made. Okay, and of course the balance sheet. So now let's go back on work in progress. So defined work in progress before. Now, there are two types of work in progress. There's opening work in progress, which is goods which are partly completed at the start of the accounting period. So, as you are starting to record your books, okay, or as you are starting a trading period, okay, for example, you are starting 2025 trading period. There are some goods that may be from the previous year, okay. So you may need to continue with them. So those ones are called opening work in progress, or chairs that were not completed. Maybe they needed the hands, okay, but you were not able to complete the previous year. So they will go in the following year. Those ones are called opening work in progress. Then closing work in progress. These are goods which are partly completed at the end of the accounting period. That is, when 2025 finishes, then again we have some goods that are not completed. Those ones are called closing work in progress. So the adjustment for work in progress ensures accurate calculation of production costs during that period. So here are some stages. Of course, you can remember them, but once you do one or two manufacturing accounts, you get used. It's simple. So here are the stages in preparing a manufacturing account. First, you have to compute the raw materials that have been used in manufacturing. Two, you have to know the prime cost, which is the total of all direct costs, right? Then after that, you also have to factor in factory overheads, which are the indirect cost. Okay, so once you have the direct cost and the indirect cost, you also have to adjust for opening and closing work in progress. Okay, when you have the direct cost and indirect cost, the job is not fully done. You also have to think about the work that was in progress when you started and also when you finished. Okay, so once you do this now, it means you can now calculate the total cost of production and your manufacturing account is done. Then after that, you may need to establish manufacturing profit or loss by comparing cost of production with market value, which simply sometimes needs you to do the profit and loss account. Okay, so these are the stages in preparing a manufacturing account. Okay, we understand the stages. Let's look at the layout. So this is the layout of the manufacturing account. The title is going to be manufacturing account for the year ended 2025, for example. So the first, I hope you can see, it's opening stock of raw materials. You're going to put it here, okay? Opening stock of raw materials. That is how many raw materials were you having when the year started. Then from here, you're going to add the raw materials you bought so that you know all the raw materials that were involved in that year. So you're going to add purchases of raw materials, okay? Then you add the amount of money that was used to bring those raw materials into your factory. So you are going to add carriage on raw materials, okay? So once you have this, you can calculate the total raw materials available, which is the sum of these three quantities: opening stock, purchases of raw materials, and carriage on raw materials. Okay, that is the amount of timber you had before the year started, the amount of timber you bought during the year, and the amount of money you spent bringing the timber in. Okay, uh, by the way, when I say the amount of timber, I mean the value in terms of money of the timber. Okay, so once you have the value in terms of money for the timber you had at the beginning of the year, and also the one for I mean the value of the timber you purchased during the year, and also the amount of money you spent on bringing that timber to your factory, then you can add them to get total raw materials available. Okay, then you have to remove the raw materials that remained when the year finished. So you have to do minus uh, uh, closing stock of raw materials. Okay, so those raw materials that remained, you have to subtract them. What you're going to get is the raw materials consumed. Think of it in this way: you started with two chairs, I mean two timbers. You bought three timbers, total five timbers, okay? Then by the end of the year, you have one timber. It means you used four timbers because you started with two, you bought three, then you have remained with one. So two plus three, five. Five minus one, four. So that four is the amount of timber you have used, okay? So that will be the raw materials consumed, okay? But of course, we have to add the cost on bringing that raw material into the factory. So once you are done with raw materials, you have to go to direct expenses. You start with direct labor, the amount of money paid the workers. Then you have to add uh, uh, wages also, okay? Then also royalties. Royalties are also part of direct expenses. Then also lubricants. Did you buy some oil for the equipment? That's part of direct expenses. Okay, then when you add this, you get the total direct expenses or the prime cost, which is this. After that, you go to indirect cost, which are factory overheads, which includes factory rent, factory lighting and heating, factory power, depreciation of factory equipment, uh, even the manager's salary, and insurance of factory building. Okay, it's not always that you're going to have these, but you write what you have been given. Okay, so these are the indirect cost. Okay, so after that, you have to factor in work in progress, which will start with you add opening stock of work in progress, the amount of timber that you had already assembled trying to make a chair, but it did not finish the previous year. So the opening stock of work in progress, you write it. Also, the closing stock of work in progress, you subtract, okay, from the opening stock of work in progress. What you get now, when you add all these, will be the cost of production. That is raw materials consumed, prime cost, indirect cost, and the difference between the difference of work in progress. What you get is the total cost of production. Your job is done. Then of course you can do some adjustment here where you compare the cost of production with the market value of items, which sometimes will need you to do a balance sheet. So next time, a profit and loss account. So the next thing we're going to look at is a full example of a manufacturing account. Okay, that's the next task. Okay. Okay, so let's look at this worked example. So the trial balance as at 31st December 2024 as this. So the opening stock of raw materials was this, the work in progress, purchases of raw materials were given to types of wages, direct and indirect. So direct, you put them in the direct cost, indirect, you put them in the indirect cost. So indirect is like the manager's salary that we discussed in the layout of the manufacturing account. Then we've got factory power, factory rent, depreciation of plant insurance, administrative salaries, selling expenses, carriage inwards, sales. So some of them like sales, where do you place them? Okay, in manufacturing account. They are not supposed to be there. Okay, but remember what I said. After you get your production cost, you may need to calculate the net profit. Okay, therefore, you need the profit and loss account. That's where the sales and these others are going to be. Then we have closing stock of raw materials and closing work in progress. Then there is additional information which is not in the trial balance. The opening stock of finished goods was this. The closing stock of finished goods was this. Finished goods are transferred to trading at a cost price without factory profit makeup. Okay, so because of that, this statement simply means the production cost that you're going to use is you use it. The production cost you're going to get from manufacturing account, you're going to use it directly in the profit and loss account. Okay, so the required is prepare the manufacturing account for the year ended 31 December 2024, the trade and profit and loss account for the year, and the balance sheet as at 31st December 2024. So let's see how to go about it. So we start with the manufacturing account. Okay, so as usual, remember the format. You start with opening. First, you deal with the raw materials consumed, which in which you start with the opening stock of raw materials. This was the value. Then you add the raw materials you bought, purchases of raw materials. This was the value. Then the amount of money you used to bring those raw materials in the factory, which is carriage inwards, which is this value. So the total raw materials available is this. Then we have to remove those raw materials that remained at the end of the year. So this closing stock of raw materials, which is this. When we subtract these two, we get this, which is the cost of raw materials consumed. Next, we go to direct expenses. So we have to identify direct expenses from our list. Okay, if we try to do so, we have wages, which are 25,000, and what other direct expense do we have here? Okay, what other direct expense? We have work in progress, we have purchases of raw materials, we have wages, we have factory power, it's indirect, factory rent, it's indirect, depreciation of plant, it's indirect, factory insurance, it's indirect, administrative salaries, it's indirect. Okay, so our direct expense is just one, which is direct wages, which is 25,000. Then we add the total of raw materials consumed and the direct expenses to get the prime cost, which is 69,000. Next, we go to indirect costs, okay, which of course are factory overheads, such as factory power, factory rent, factory insurance, indirect wages, depreciation of plants. Okay, so when you add this, you get the total factory overheads, which is this figure. Okay, now when you add this figure to the prime cost, you get the factory cost of production. Okay, finally, we have to factor in the work in progress. So we add opening work in progress, which is this figure here, and it will give us 89,300. Then we subtract closing work in progress. Let me just enlarge in case you're not seeing clearly. Okay, then you subtract closing work in progress, which is 1,800. So when you subtract, you get this. Okay, this is the cost of production. Your manufacturing account is done. It is as simple as this. Okay, next you go to trading and profit and loss account for the year. Okay, so remember, if you have not revised the trading and profit and loss account, please revise. We're just going to make a few adjustments to factor in cost of production. Okay, so we're going to start with sales and cost of goods sold, right? So sales, we have been given 5,000. Okay, then opening stock of finished goods. For sales, we start with opening stock of finished goods, which is 5,000. Then we add cost of goods produced. Okay, so this cost of goods produced comes from manufacturing account. It is this figure here that we have gotten, total cost of production. Okay, so what we have done, we have just gotten the opening stock of finished goods, which was 5,000. Then we add the cost of goods produced. Okay, so we started with this number of chairs. Then throughout the year, we have spent so much in making more chairs. So meaning that the total amount of chairs for this year is the ones we started with the ones we started with plus the ones we have made. Okay, so this figure here is the cost of the chairs we have made for this year. Okay, which is the cost of production. So the total will give us the cost of all the goods that we are ready to sell for or during this year. Okay, which is this. If it's too much, think about it in this way. Okay, you started with 2 chairs. Okay, then during the year, the amount of money you've spent in making chairs is let's say 10 kwacha. Then the 2 chairs you started with, maybe it was 2 kwacha. Okay, the cost of production for those 2 chairs was 2 kwacha. Then during the year, you have spent 10 kwacha to make more chairs. So the total amount you have spent making chairs is 12 kwacha, which is just the 2 chairs you started with plus the chairs you have made. And that is the cost of the goods that you are ready to sell, the finished goods. Okay, so 92,500. Then you have to ask yourself, are there some finished goods that have remained without being sold? So you have to subtract closing stock of finished goods. Okay, those which by the end of the year they were not sold. Okay, in this case it was 6,000. Okay, so you get the cost of goods sold. Okay, then after that you go to sorry, I did not indicate the figure here. Oh, sorry, I'm sure it's this side. Yeah, I did not show the figure. Let me just I think it's okay now. So cost of goods sold is going to be 86,500. Okay, cost of goods sold is going to be 86,500, which is this figure, which is the cost of goods available for sale minus those goods that were not sold. So this is the amount of goods that were sold. Okay, so now this figure plus plus the total sales that were made. Okay, the total sales that were made was 120,000. Okay, so this 120,000, which is the total of sales that were made plus the cost of goods, minus the cost of goods sold. Okay, it's going to be this. Let me explain it well. So during this year, the amount of money we have made from sales is 120,000. Okay, but the amount of money that we invested in making the chairs is 86,500. What is the profit? The profit is the difference between the amount of money we've made from sales minus the amount of money we spent in making the sales. In making those goods that were sold, which is the cost of goods sold. So the difference will give you the 3,500. That is the gross profit. Okay. So here you're factored in the manufacturing account. So now you continue with your profit and loss account. So you go to administration and selling expenses. Okay, we just want to subtract the expenses from the gross profit so that we get the net profit. Remember, a profit without expenses subtracted from is not the net profit. So to get the net profit, you need to subtract the expenses. So you start with administrative salaries, which is this. Selling expenses, that is the amount of money you spend in taking those chairs to the market, okay, which is this. So administrative salaries and selling expenses will fall here, okay. Then you can add them to get this, and the net profit will be the difference, which will give you this, okay. So that's how you conclude your trade profit and loss account. Next, you go to the balance sheet. So the balance sheet, of course, you start with fixed assets, which are going to be plant and machinery. So in the balance sheet, the figure that has to be indicated there is the net figure. That is, if your plant and machinery, they are costing 20 kwacha and they have depreciated by 2 kwacha, you have to subtract 20 minus 2 to get 18. The 18 is the one you're going to include here. However, in our question, there was no mention of depreciation, okay? There was no mention of, oh, actually, was there? Let me see. What's the cost of plant and machinery? Did I even indicate the cost of plant and machinery? Let me see. Plant and machinery, okay. No, I did not indicate uh, the value of plant and machinery, but you may have that figure, okay. So in case you have that figure for plant and machinery, it has to be indicated as part of your fixed asset, okay. Remember, the main focus was on manufacturing account, okay. Then another interesting part is the current asset, okay. So the current assets, you have to start with stocks of raw materials, also stock of work in progress, okay, and stock of finished goods, okay. So these are the raw materials that the company still has, the work in progress that the company still has, and the finished goods that the company still has, okay. Remember, the closing stock of finished goods is 6,000, so that's the one you're supposed to put. Closing stock of work in progress, that's the one you're supposed to put, okay. And also closing stock of raw materials, those are the ones to put. In the balance sheet, we look at the assets that the company has, okay. So we look at those that the company still has at the end of the year, the closing ones, okay. Datas, if you have been given datas, you can also include them here. They are part of assets. If you have been given money in the bank or cash, you can include it here. And then you can add to get the total, okay. Then again, you can go to current liabilities. You look for creditors if you have been given. In this case, we're not given. So if you have creditors, you can include them here. Then you go to net assets, which is fixed assets plus working capital. In this case, it's going to be our fixed assets plus working capital. Remember, working capital is current assets minus current liabilities. That is the total you get on current assets and current liabilities. You subtract them to get the working capital. Okay, I'm just trying to take you through the balance sheet we already did. So current assets minus current liabilities will give you the working capital. So now that working capital, you are going to add it to the total of fixed assets, this figure, okay. So in summary, you get the current asset plus current liabilities. I mean current assets minus current liabilities. Then the difference, you add it to the fixed assets, okay. In case you are lost, please revise balance sheet. Okay, so what you're going to get is the net assets. Then again, you factor in capital and net profit. The net profit is the one you get from trade profit and loss account. Okay, that's the net profit. And also capital, if you have been given, you add the capital and the net profit, you get this figure. Okay, so in summary, the main point of this lesson was the manufacturing account, which has the cost of production. Okay, the aim of the manufacturing account is to find the cost of production, which starts with raw materials consumed. then you add direct expenses, you add factory overheads, and from there you'll be able to get the manufacturing cost. Now, after you get this figure, you use it in the trade and profit and loss account. Okay, so you have to use it in the trade, profit, and loss account here. Okay, after you get your opening stock, you have to add cost of goods produced. Cost of goods produced. Okay, then after that you calculate your gross profit. Okay, then you can subtract the expenses to get the net profit. Then after that you go to the balance sheet. The balance sheet, we did not deal with it in details because there was no much information given. But what is important is to know that on current assets, you record these closing stocks of raw materials, work in progress, and finished goods. Okay, then on fixed assets, okay, whether it's manufacturing account or not, you have to record the net value, that is the value at the beginning of the year minus the depreciation. So sometimes they'll give you information about depreciation. You need to calculate the depreciation. Okay, once you calculate the depreciation, you will get the difference between the value of the plant and machinery at the beginning minus the depreciation. So what you get, the net value, is the one you are going to show in the balance sheet. Okay, so that marks the end of this lesson. See you in the next lesson.